If you opened your investment app right now and saw a balance that barely looked different from 6 months ago, would you feel motivated or quietly disappointed? Most people feel the second one. They do everything they're told to do. Save a little, invest a little, stay patient. And yet progress feels invisible. It feels like effort without movement. And that's exactly where doubt starts creeping in. You begin to wonder whether this whole building wealth idea actually works for normal people, or if it's just a story that sounds good online. Here's the uncomfortable truth most people never hear early enough. Wealth doesn't grow in a straight line. It never has. And the frustration you feel in the beginning isn't a sign that you're failing. It's a sign that you're still in the hardest phase of the process. Let me explain this in a way that actually makes sense. Imagine you're trying to get a heavy train moving from a complete stop. At first, you push with everything you have, and nothing happens. You push again, harder, and still nothing. It feels pointless. But then, very slowly, almost imperceptibly, the wheels start to move. Once the train is rolling, even a small push keeps it going. The work didn't disappear. The resistance did. Money works the same way. In the early years of investing, almost all the progress comes from you. Your discipline, your consistency, your patience. The money itself isn't doing much yet. It's like that train before it starts moving. And this is the stage where most people quit, because they assume slow progress means broken progress. It doesn't. It means you're still building momentum. Most people imagine wealth building as simple addition. Save $10,000, you're $10,000 closer. Save $50,000, you're halfway there. Logical, right? But investing doesn't reward linear thinking. It rewards time and scale. And until you reach a certain point, the scale simply isn't big enough to feel exciting. Let's say someone invests consistently for years and finally reaches their first $100,000. On paper, that doesn't look impressive compared to $1 million. It feels like the beginning, not the breakthrough. But psychologically and mathematically, it's something else entirely. That first 100,000 is proof that momentum exists. It's the moment when money starts contributing meaningfully instead of just sitting there. Before that point, investment growth feels like pocket change. A few hundred here, a couple thousand there. Nice, but not life-changing. After that point, the numbers start behaving differently. Growth stops feeling symbolic and starts feeling real. This is where perspective matters. Think about two people with the same habits. One has 10,000 invested. The other has 100,000 invested. Both earn the same return percentage. But the second person earns in 1 year what the first might take a decade to see. Same effort. Same discipline. Completely different outcome. Not because one is smarter, but because scale changes the rules. And here's what most people don't realize until it's too late. The hardest part of building wealth isn't learning how to invest. It's staying consistent long enough for scale to kick in. That's why so many people hover around the same financial level for decades. They never stay in the game long enough for the math to start working for them. Now let's talk about time, because this is where everything either works or falls apart. Time is not neutral in investing. It either helps you or hurts you. When you invest early and consistently, time amplifies every small decision you make. When you delay, time amplifies the cost of waiting. That's why two people with the same income can end up in completely different places financially without ever doing anything dramatically different. One starts early and stays boring. The other waits for the right moment. Only one of them benefits from compounding. Compounding isn't magic. It's simply growth building on growth. But what makes it deceptive is how quiet it is in the beginning. For a long time, it feels like nothing is happening, and then, almost suddenly, it feels like everything is happening at once. That's not luck. That's delayed acceleration. This is why the first major milestone matters so much, not because it makes you rich, but because it changes your relationship with money. You stop asking, is this even worth it? And start asking, how do I protect and grow what I've built? Your mindset shifts from survival to strategy. At this stage, something interesting happens psychologically. You start paying attention. Not obsessively, but intentionally. You notice how much a single year of growth adds to your balance. You notice that market fluctuations don't scare you the same way anymore. You're no longer emotionally attached to every up and down because you've seen the bigger picture, and that emotional stability is underrated. People don't lose money in the market because the market is cruel. They lose money because they react emotionally when they shouldn't. They panic when prices fall and hesitate when opportunities appear. The person who has already built a solid base doesn't react the same way. They've trained themselves to think in decades, not weeks. This is also where opportunities start showing up differently. When you have no financial cushion, every decision feels risky. You can't afford to make a wrong move. You can't afford uncertainty, but when you've built meaningful savings, you gain optionality. You can walk away from bad deals. You can wait. You can choose. That flexibility alone is a form of wealth most people never experience. And here's the part that surprises people. The habits that got you to your first major milestone don't disappear. They compound too. You've already learned how to live below your means. You've already proven that you can delay gratification. You've already shown yourself that consistency works. Those skills don't reset at a certain balance. They scale. As your income grows over time, your contributions often grow with it. What started as a modest, uncomfortable habit becomes routine. What once felt like sacrifice starts feeling normal. And because of that, the pace accelerates even more. This is why the journey from a solid foundation to a much larger number often feels shorter, even though it technically takes years. Momentum changes perception. Now, let's address the objections that quietly stop people from starting. What about market crashes? They happen. They always have. But long-term investors don't fear them the way short-term thinkers do. When you're consistently investing over decades, lower prices mean you're buying more future growth at a discount. Volatility hurts people who speculate. It benefits people who stay consistent. What about inflation? Long-term investing already accounts for it. That's why historical returns are discussed in real terms, not fantasy numbers. The goal isn't to beat inflation occasionally, it's to outpace it consistently over time. What about not having enough money to start? This is where honesty matters. Most people don't lack income as much as they lack awareness. Money leaks quietly through habits that feel normal until you look at them closely. Small, repeated expenses rarely feel dangerous, but they add up to years of lost growth. And here's the hard truth. Waiting until it feels comfortable is the most expensive strategy of all. The people who build wealth aren't the ones who waited for perfect conditions. They're the ones who started imperfectly and stayed consistent anyway. They didn't optimize every detail. They focused on one thing: staying in the game. Because wealth isn't built by intensity, it's built by duration. If there's one idea to take away from all of this, it's this: the early phase is supposed to feel slow. That slowness isn't a flaw, it's the entry fee. Once you've paid it, the system starts working with you instead of against you. The question isn't whether this process works. Decades of data already answered that. The real question is whether you're willing to stay consistent long enough to experience the part most people never reach. Years from now, you'll look back at the moment you chose consistency over impatience as the point where everything quietly changed. Not overnight, not dramatically, but permanently.